Hi everyone. Today we're going to talk about Affirm. Before we get into the details, please hit the subscribe button on YouTube to this investing education channel. Do appreciate that. Um, Safe harbor statement. I'm an individual investor. Please do your due diligence before you buy or sell your shares. Take professional advice if possible. On investing, I wanted to quote legendary investor Warren Buffett, who made a statement: "The most important investment you can make is in yourself, whether it's learning a skill like music, sport, investing. It's a long haul. You have to put in the effort to learn. So invest in yourself and grow." We'll again talk about four things today: business strategy, risk, moat, and capital allocation. Affirm, what they do is very interesting. They're a buy now, pay later. So they are a BNPL platform where they enable consumers and merchants to come on a single platform. That's one. And then the second key that they have is they want to unbundle their credit card market. The credit card market is charges consumers high interest rates on the unpaid balances and their compound interest, while BNPL players like Affirm offer simple interest. The rates are also low, and it's simple interest, not compounded. So those are a couple of differences where Affirm is trying to target. The other piece is from the financial objective. What I liked from what I read from the report is they're focused on fiscal discipline. Fiscal discipline means they want to have a good control over how they manage the finances, both from the supply side and how they lend the money to credit-worthy consumers, collect it back, and have the brands and consumers trade on that platform in terms of brands and products and services. Max Levchin is the founder and CEO. He was the founder and CEO of co-founder and CEO for PayPal, along with Peter Thiel and Elon Musk. Elon Musk had X.com, X.com, and PayPal merged, and Max was the engineering head at one point of time. After selling out that company and they went IPO, Max took a break. He used to bike a lot. I used to see his blog or tweets somewhere where he used to blog a lot that he was biking a lot. And then he came back with this company in around 2012. He started this company, and a couple of things that I wanted to mention is his ability to understand consumers and build a consumer rich experience platform from his PayPal days. That's a big difference that a founder can bring. And the other piece is their ability to partner with enterprise scale partners like Shopify and Amazon, which is a big deal, and their ability to do self reinforcing networks, right? Like bringing the merchants and consumers on the same platform. That's these are some of the key differentiators, and it's interesting to see the CEO and the founder talk about it. Why Affirm? The numbers, the proof is in the pudding. The active merchants are 168,000. Active customers are 11 million. So merchants went from 7,000 to 168,000. Consumers went from 4 million to 11 million, and the GMV went nearly 115% to 4.5 billion. Apples to apples in 2021, Affirm did around 8 billion in GMV. So you can see in single quarter, they pretty much have achieved 50% of last year's GMV, which is a good sign. They are tapping into a large market. We'll go right to left. They want to tap into the US merchant market, which spends $1 trillion, or at least the market size is trillion, to acquire consumers. The second piece is consumers. Consumer credit card spend is around 8 trillion. That's the market size that they can go after. And of course, there's a big shift in during COVID where everyone's doing more online transaction, whether it was grocery delivery or online e-commerce, right? So these are the three areas that they want to target, but predominantly onboarding merchants on one side and onboarding consumers on the other side. The business model is very simple. Connect the consumer with the brand with their super app, Affirm super app, and pass on the credit facility that they have from a lender like Cross River Bank, and give that facility to a consumer. Or to the consumer, what they do is they essentially do real-time credit check, approval or denial at the point of sale, and they are able to lend consumer money at nominal interest rates, which are simple interest, and the consumer can pay over a period of time. While the brands get the benefit of getting consumers onto a single platform, they can sell more, they can increase the basket size that consumers are buying. They can get paid in 1 to 3 days from Affirm because they have this credit facility. Affirm can pass on that money upfront to the brand and settle with the consumer over a period of 3, 6, 9, 12 months. Um, so the revenue model is very simple. Affirm gets a loan at a certain percentage from the lender. They pass it on with a margin to the consumer. So that's the first income revenue that they get, interest income from the consumer. Other piece is whatever products and brands that the consumer buys from a brand, that percentage transaction fee goes to Affirm. So those are the two major revenue streams. There are a couple more which are which we won't delve deep into in this presentation. Affirm's flywheel is very simple. They want to onboard more merchants, more consumers. So more consumers mean more merchants want to come onto this platform, and more merchants can sell more products, means more transactions, which means hopefully better experience for both sides, both the merchant and consumer. That's where Affirm's flywheel comes into play. Consumer gets a super app on one side with which they can search for brands and buy products, and they can interact via Affirm with the brands, right? Brands get a 360 view of the consumer. They can improve the AOV, average order value, of the products or brands that they sell to the consumer. And Affirm provides this platform on one side to the merchant, the other side to the consumer. And that's how the flywheel starts beginning, and it starts growing in momentum. Flywheel is like you give one rotation to the flywheel and starts getting the momentum, starts running on its own. Their major competitors are Klarna in Sweden and Afterpay, which got acquired by Block, and Adyen. Adyen introduced the method of pay for BNPL. So these are the three key players. In addition, we have the usual suspects, Stripe and PayPal, credit card companies, American Express, Visa, and MasterCard, and the big banks, Capital One, Citi, Synchrony, Bank of America, and JP Morgan Chase. These are their competitors. Of course, uh, nobody's running away from this business, so it will be interesting to see how these businesses evolve over a period of time. Affirm's moat comes from three areas: their ability to build a network of merchants and consumers on a single platform. And second thing is technology is the core. It's a product-led engineering company. Max Levchin, the founder himself, is an engineer, and their ability to do credit scoring, fraud detection using AI, ML, artificial intelligence, and machine learning is a competitive advantage. And the third piece is the business model. Their ability to line up credit facility on one side and pass the money to the consumers on one side and enable consumers to buy brands brings lenders, merchants, and consumers onto the platform. Risk factors, of course, we talked a lot about the founder. Any founder changes could be a big risk. Financial, we would like to see the operating expenses going down. Currently, it's at 48% of the revenue in fiscal year 2021. They are spending a lot and they want to spend a lot to acquire more merchants. I think their belief is they acquire more merchants and they can start cranking that flywheel to acquire more consumers onto the platform and thus grow. Of course, we talked quite a bit about competition. We won't touch upon it. Customer concentration is something that they need to diversify in terms of number of customers, as well as in terms of the geography itself. Currently, the customer concentration is in US, and the second piece is someone like Peloton was contributing 28-30% in 2020. It's down to 20%, which is a good sign. So hopefully we need to see some improvements in some of these areas. Capital allocation, you can see the GMV has grown 3 times since 2020, which is a good sign. So you can see the company is growing through the COVID, pre-COVID, post-COVID, and partial opening during the pandemic, they've grown well. GMV on a quarter-to-quarter basis, 84% growth, which is phenomenal. And ex Peloton, like removing Peloton's impact, 138% growth to 2.7 billion in terms of GMV. The average order value has come down quite a bit, and I think the impact is due to Peloton not doing well, due to gyms reopening, partial opening, so on and so forth. That's why I mentioned that the customer diversification is very important for Affirm. We talked about the first three buckets, the GMV, active merchants, and active consumers. We'll talk about the total revenue. It went from $204 million to $361 million quarter to quarter on a yearly basis, which is a good sign. The revenue, as I told earlier, comes from two buckets: transaction fee from the merchants and the interest income from the consumer. There are two more buckets which has got not top line impact at this point of time. Price points, the price of the shares fell considerably after growing through the COVID up to 170 levels and fallen down to 46, 47 levels. The reason for the fall is, of course, as we talked about it, operating profit margins are lower. They're spending more to grow merchants, and hence the fall. Massive volume on Thursday and Friday. They unfortunately released it on Thursday on Twitter instead of Friday, so it fell a lot on Thursday and then again on Friday after the results were declared. In summary, we talked about business strategy, the moat, and we talked about risk in detail. Capital allocation, something is very interesting. They talk about reducing the outstanding shares from 323 million currently to around 290 million fiscal year 2022, which means the number of shares will go down. They'll do buybacks. Hopefully, this will increase the share prices by end of this year. The other piece is for their funding capacity, $7.3 billion, which is a good sign. They have this Cross River bank that's lending to them. In addition, they have credit facilities with other institutional investors as well, so which is a good sign. Thank you very much for listening on Affirm. We'll connect next week. Before I go, please click on the subscribe button and subscribe to Investing Education channel. See you next week. Thank you very much.